Good evening, everyone, and welcome to Stock Durbar with Team William in India. I hope my voice is clear and you are able to see Nifty's chart. Just a couple of confirmations. Okay, clear. Thank you, Shyam. Both the Shyams. Yeah. Namaste to all. Okay, so let's start with Nifty setup. And please do not post your questions now because after the first 15-20 minutes, only we will start to take your questions. Okay, so recently, I think the month of April is the month of IPL, right? Tata IPL. But the similar thing is happening in the Nifty. निफ्टी का सेटअप भी वो पूरा आईपीएल के वो 20 ओवर्स की इनिंग जैसा है. It's something like the power play, the first 6 overs and then the following couple of overs. There is always a good momentum, and it's something like that at the start of April for the first few sessions, and there was a very good momentum. और जो middle overs है वहाँ पे generally थोड़ा चीज slow down हो जाता है मैच में, and similar thing is happening as of now. So since last you may say 5-6 days, there has been a sideway movement after this gap up. यहाँ से gap up होने के बाद ये थोड़ा पिछले 3-4 दिन से sideway to negative movement था. वो momentum थोड़ा lose हुआ, but now I think we are moving towards the final overs, and over here you will always see some action. And Nifty ka setup be something similar to that, which is ready for an action in the final overs, or you can say the slog overs are ready to start because it's already 4 sessions, back-to-back 4 sessions, where Nifty found support near 200 DMA, guys. Seriously, now that these black line is the 200 DMA, the red is the 50 DMA. Okay, so the 200 line is moving a bit higher and it's somewhere around 17,575 level. And for continuously 4 sessions, we found support near 200 DMA and we managed to close above that level. Okay, and we are just 0.5% above 50 DMA. So now I think Nifty might after and see next 2 sessions. यहाँ पे थोड़ा volatile था. This was also the range was a bit high, but if you see last 2 sessions, कुछ range ही नहीं था. 100-150 point में 2 दिन से Nifty घूम रहा है. It was that smaller range for the Nifty that it is trading in a very small range of 100-150 points since last 2 days. Today even F&O expiry was there on a weekly basis, but then also it was just 100 point here and there, though the broader market was a little volatile. Cash market में थोड़ी volatility high थी, but overall if you see on the Nifty, even the volume, I think volume was lowest in past many sessions. So here we have not got the markup for today's volume, but it was very low. I think it was this low. 25-30% below the 20% at least below the average volume. इतना low था आज निफ्टी का. So it looks like now Nifty if gets rebound from this 200 or you can say 550-600 वाला जो zone है, ठीक है, 17,550-600 zone. If Nifty finds support in that zone and rebounds sharply maybe tomorrow or Monday, then you might see that Nifty might test this 850-900 level, and then it might try to attempt a follow through day, because in this rally we have yet not got the follow through day, and I think that's very important for a sustainable rally. So we will look for a follow through day and a move about the recent high, that is 850 to 900 wala zone hai uske upar. On the downside we might look for support near this 750-600 zone, 50 and 200 DMA. If we breach that level, then I think there might be some selling at least till the, you can say, the 21 EMA level, which is somewhere around 350, and below that we might go to test a lower level. So this is how Nifty setup looks like. Overall, it's a neutral as of now, not highly positive, negative, but there are some pocket of strengths, which has been the story of the last 1.5 year. That the markets are very volatile, the direction is not very clear about the market, but there are always pocket of strengths and weakness in the market. And even in this market, there are many cash stocks, many stocks in the F&O also on the index front also that are holding really well, that are having high RS rating, okay, that are outperforming the market. And not only the Nifty, but with having the highest weightage, in the Nifty 50 index, Nifty Bank is holding really well, in fact, since last few sessions. So yeah, over here also there was a continuous rally from the low it made on March 16. वहाँ से for 1 month from 38,600 it has moved to 42,600. So almost a 4,000 point rally in just a 1 month as far as the bank Nifty is concerned, and it is trading well below, sorry, well above its key moving averages, and it is giving a good strength to Nifty. Not only the private banks, which I think the pack entire is led by the HDFC Bank. So if you look at the setup of HDFC Bank, it is really positive. And again, just to clarify you all that the index, the stock names, whatever we discuss is just for the educational purpose only, the knowledge sharing purpose only. Please do not consider it as an advice to buy, sell, or any other investment advice. Okay, so just wanted to make it clear again. It's a clear disclaimer. Okay. So overall, Bank Nifty, so HDFC Bank's result was quite decent. It was not something which was very good, but it was a neutral to positive kind of result. So the loan growth, the deposit growth, the overall profitability growth was decent. And I think the asset quality is robust for these banks. And even the PSU banks are picking up now. They have reclaimed, I was looking at few PSU banks chart. They have also started reclaiming its key moving averages, and that's always positive. Yes, HDFC Bank is sideways as of now. That's a good comment, but I think the entire rally, it was one of the outperformer in the rally of this Bank Nifty. Even the HDFC, along with the bank, and I think the ICICI Bank is also moving higher. So it's a good setup for banks. I think the numbers are expected to be pretty decent. The ICICI Bank is reporting this weekend. So I think that number will also impact a lot. And I think in the next 1 or 2 weeks, most of the leading banks will come out with their numbers, the private as well as the public sector banks, all will be out with the numbers, the majority of them in the next couple of weeks. So that will be very important, which will shape the next move of the Nifty Bank Index. If you look at the FMCG, the story remains the same. That the urban consumption remains robust, no two ways about that. But still, the rural demand is not able to pick up, and it's moving sideways. The entire index, if you see, has not given a major move on the higher side or the lower side. But yes, since in this last 2-3 months, it is moving sideways. Even before that, बीच बीच में एक दो बार छोटा मोटा move आया था ऊपर नीचे. बाकी broadly, it is moving sideways. But the good part is it is near its high. So there is some pressure, some tension regarding the consumption. As of now, it's robust, not an issue. But I think the monsoon, the heat wave is going on in the country, and there is possibility of irregular rainfall with El Nino. So there might be some pressure as far as the consumption is concerned. If these things doesn't settle well, if it's negative, it turns out to be negative. So inflation part पे भी थोड़ा impact होगा, as well as the rural consumption, which is trying to pick up. वो फिर से I think धीरा हो जाएगा, वो पिकअप नहीं हो पाएगा. It might need some more time, some good seasons of harvesting, good money in the hand of the rural economy. But so that's the entire process. But overall, if you see the the volume growth थोड़ा tepid है, but the price led growth is very good for the FMCG companies. I think most of the companies have hiked their price. And abhi jo raw material cost hai, which was very high couple of quarters back, this has now normalized. So I think that might reflect in their margins also in this quarter's result. Otherwise, some of the leaders like ITC, and so these guys are really holding well. Even the Nestle is about to complete its base formation. So some of the leading stocks are making a move. So that's not a problem for FMCG. So auto, so overall, the demand is robust for the autos and even the ancillaries. So not only on the OEMs, but the ancillary part is also doing really well, because the last year the auto demand was very good, and it might continue for next couple of quarters, and that's the expectations. And most of the companies, except the two-wheelers, the traditional two-wheeler companies, but the demand is a bit low, क्योंकि जो rural economy से demand आनी चाहिए वो अभी नहीं आ रही है. So that's the problem for the some of the two-wheeler companies. But overall, if you see the even the international market जो export है two wheelers का, वहाँ पे कोई इतना issue नहीं है. But yes, the domestic rural consumption is less. Otherwise, बाकी जो commercial vehicles है, four wheelers है, PVs में, वहाँ पे कोई problem नहीं है. The demand is really robust, and they are also able to price hike भी pass on हो रहे हैं. They are able to pass on the price hikes, and that is also very positive for the market, because if the OEMs are able to pass on the price hikes, then if the auto ancillaries will also be able to do that. और फिर ऑटो ऐसी सिचुएशन में क्या होता है कि ऑटो एंसिलरीज के लिए there is always a two tailwinds. One, like the replacement demands, let's say for the tires, for the batteries. So the replacement market is already robust, and the orders from the OEMs are also increasing as the semiconductor issues or the other supply side issues are now a bit low. I'm not saying it's over, but हाँ, पहले जो last year जितना था उतना नहीं है. तो अभी production भी काफी robust है. You look at the production numbers of Maruti, Tata Motors, Ashok Leyland, they all are really good. So these auto OEMs will be giving a very very good order to the auto ancillary players. So ancillary players को replacement market plus from the OEMs दोनों side से काफी अच्छे orders मिल रहे हैं, and that's why that segment is also trying to move higher. थोड़ा रॉ मटेरियल कॉस्ट का इश्यू है वहां पे अभी भी. लाइक फॉर आई वाज लुकिंग फॉर द लीड प्राइसेस बैटरी मैन्युफैक्चरर्स के लिए. जो मेटल प्राइस ओवरऑल जो कोविड के बाद जो बढ़े थे उसके बाद काफी कूल ऑफ हुए हैं मोस्ट ऑफ द कमर्शियल मेटल्स. बट लीड वगैरह जो बैटरीज में यूज होता है दैट इज नॉट दैट मच कूल्ड ऑफ. दैट इज एट a little higher level only. But as I told you, they are able to pass on the prices to the OEMs and also in the replacement market. So IT has been an accident, especially the Infosys of the week, you can say. This gap is huge, and it again tried to find support near its previous low around the 26,000. I think last to last time also we discussed these levels in the stock Durbar. Some of you might be there. That now I think looking at the way the IT was not able to hold the gains. It couple of time it tried to hold the gains, but it was not able to do it, and hence it again is testing the 26,000 level. So I think the major fall was after the TCS का result इतना खराब नहीं था. They were able to beat some of the expectation, or were mostly in line with the expectation. इतना major miss नहीं था. But Infosys was not able to deliver. So that was the major problem. And you see this gap down in the Nifty IT. So the demand scenario, जो उनका order book है, ठीक है, new deal wins है, on the margin front, on the growth front, it was a bit disappointing. The result as well as the commentary. सिर्फ result disappointing होता, if there was only some disappointment in the result, but the commentary was good for the next couple of quarters, then it might be have hold, because the stocks like Infosys doesn't fall 10, 12, 15% in a day easily. But here the disappointment was from the both the front, and that's why you have seen this accident happening in Infosys. Now, if we take metal, it is trying to rebound. You can see technically still it is not able to move above its 200-day moving average. So it breached that level somewhere in the February, and since then it is not able to move above that level. But it's a bit volatile. A couple of times higher move, फिर से नीचे आ गया. So it lot of things in the metal depends on the China. So I think the now Chinese growth is picking up the momentum. So there might be some good price increase in the overall metal sector, and the demand will also improve, because China is one of the major exporter as well as the consumer of these metal products. And what they are doing, exports unka kam ho raha hai due to the environmental reasons. They are shutting down few of its factories and controlling the exports. But whenever there is a high demand in the Chinese market, the overall global demand of the metal increases, and that always pushes the price higher. And currently the growth is, I'm not saying at the top, but हाँ pick up हो रहा है China में भी, so that will positively impact the metal price and in the end the metal stocks. So now let's start with your questions, and then in between, whenever we find that some sector or some group needed to discuss, we will discuss around that group or sector. And one more thing, guys, please do not post your questions multiple times. We will try to answer as many as possible. So a key question 5-7 times some guys post, and that becomes a junk in the box, because this is the live session and we need to scroll up and down and get the queries. So it's better you put only once. And today in the room we have Vakar as well as the Rajshekar, my colleagues, and we three will try to answer as many queries as possible.
Thanks, Rishit. I'll be starting with the queries.
Sure, Raj.
Yeah, I'll start with the first query, that is Ramki infrastructure. As you can see, the stock has broken out very recently in the today's session. And today's session was also very good. It was up 2.4% on higher volume. Price volume action, the stock is looking very good. But technically also the stock has done very good. You can see RS strength of 92 and RS slightly hitting blue dots is a very positive sign on technical front. Another major technical rating, that is A by D rating, also indicating a strong accumulation happening in the stock. That is majorly because of huge huge blue bars you can see on the volume section. Only concern with the stock is there is slightly poor EPS, that is 56. That is majorly because June and March quarter results were not so good in the 2022. Also, the number of funds, the stock has only 7 funds invested. According to our methodology, we filter out, we look out for stocks which have at least 10 institutional funds holding the stock. That is because that is a minimum criteria we keep. Also, the number of funds has declined 12.5%. That is, one fund has exited the stock, which is not a good sign. And the shares held by the funds have also been on the downside, indicating institutional investors exiting the stock. So these pointers are not looking positive for the stock. Hence, it is a avoid according to our only methodology. If you have this stock, you can trail your profits and keep a tight stop loss. Otherwise, you might lose out most of your profits as well. Uh, Next is RML. Already lots of queries are here. It's a very small market cap company. As you can see, market cap is just 700 and number of funds as highlighted here is just 2. As mentioned previously, this criteria, this stock doesn't come under our radar also, and EPS is poor. So it's better to consider stocks which have good market cap of at least 800 to 1,000 crores and number of funds of at least 10 funds being invested, because institutional funds will give support to the stock if there is any weakness in the sectoral thing or any general market weakness. Institutions will hold the stock. Also, institution will give you the liquidity required for exiting. So there are many reasons why we keep number of funds at minimum funds at 10. Uh, we have learning articles related to that as well on our portal. Like browse through it to understand the importance of institutional funds as well. Next is TWL. The stock has done very good actually after breaking out from its stage 2 cup with handle. somewhere in November 2022. It has done pretty good, even though market was on the downside. This stock has held up and it has not breached its 50 DMA, even though it was breached a few times. But on the long term basis, it kept on finding support at its 50 DMA, which is a very positive sign. On the ratings wise, also, if you look at everything is looking very strong. Technical ratings of 94 and A by D rating of A plus. Uh, Definitely, you can expect this kind of ratings because the stock has done very good recently in the last 1 year. And EPS strength is also strong at 86. Number of funds, there is improvement of 18% of funds. That is also a positive sign. Overall, the stock is looking very good on the volume front. And if you are holding this stock, you can continue to hold it because there is no major sell-off happening or any. There are no major signs of profit booking as well. Otherwise, also the stock is extended nearly 80% from the 200 DMA. So that is a slight sign of concern. If there is any sell-off in the market, stock will also try to come back to its moving averages. So in such a scenario, it's better to book partial profits and ride on to the remaining positions.
Raj Vakaria, can I take some
Sure,
queries?
sure. Okay.
Rushit, can you give me the chart for Venus pipes? So again, a very small market cap stock, as you can see, and plus the number of fund holding is also very less, and that too it's declining. And as you can see, I mean, the moment doesn't look pretty good in terms of the chart pattern. The handle looks very extended. So in ideal breakouts, so the kind of handles do not actually work out, and there is a chances of failure anytime going forward. Oh, I mean, the ratings and all is good, but I mean, as Raj was probably explaining in terms of the market cap criteria or the fund holding criteria. It's always good to have stocks that have a good fund holding because that is where the smart money or the big money is. So it's always good to follow the smart money or the big money because I mean they have their in-depth research with them. So probably if they are forecasting some kind of research in some kind of result issues or some kind of earnings issue going forward. Maybe it's not seeing it at the moment, but maybe in future it can come in as a shock for the company. So, I mean, at the moment, till the point in time, the number of fund holdings grows for the stock. It's an avoid from us. The other we can look is Bharat Wire ropes. Very similar story to what we were talking in the last one. So, I mean, you can see the fund holding declining. Overall, everything is good, but when the fund holding is declining and the fund holding is less than 10 is one way we try to avoid these kind of stocks. So it's there. Some, I mean, plus you can see on the fundamental front as well, the return on equity of 3% is not that good. I mean, maybe is the EPS strength has just come in because of the recent momentum in your results in the last three quarters. So maybe it's just that. So I mean, these low market cap stock is one you can avoid. The other is ABB. So on the fundamental front, I mean, a very good beneficiary of the infrastructure driver of the India story. I mean, but you can see following the technicals, if we see it's not able to break out successfully, and it has breached its 50-day moving average as well. But I mean, the breach has been on lower volumes. So let's see if the stock is able to reclaim its 50 DMA back again, plus it's able whether it's able to perform a rebreakout or not. And with that, if you see from the ratings perspective, from the fundamental perspective, last 3 to 4 quarters result has been very good for the company and pretty much beating estimates as well. return of equity of 21% is also very good for the company. Fund holding has been increasing. So the only thing is, remaining for the stock is probably to stabilize and to probably re-break out. Once it re-break out, it can be a good stock to watch out for. The other I can look at, we can look at is this Cummins. Yeah. So buyer demand is where probably the stock is lacking. Why you can see is on the right hand side of the chart, the stock fell on above average volumes, and on that above average volumes, it did move down on its key moving average, your 50 DMA. So that wasn't a good sign. Recently, it's trying to reclaim its key moving averages. So today was a good day for the stock. It went higher, reclaimed its 10 EMA on above average volumes as well. But that's a very short term moving average. So going forward, the other red line and the green line, that is the 21 DMA and the 50 DMA, if both of them that gets reclaimed on above average volumes, then it will be a good sign. Overall, the stock is back into your ideal buy zone, but we'll still wait because reclaiming 50 DMA and 50 DMA and 20 DMA is very important. Why? Because of the sudden deterioration in your RS rating and your buyer demand.
Yeah, thanks, Vakar. So there has been a question a couple of times asked about ethos. So it has been in momentum since last couple of 3-4 sessions. I think on the Monday it went up almost 15% and gave a breakout from a stage 2 consolidation base. Overall, it has a relatively market cap of around 2,800 crore, and I think the number of fund holding is 19. So it's a recent IPO stock. So the luxury watch market. So actually, this is in the business of the wristwatch markets. It is booming. I think the demand is very high for the luxury watch market, and it is improving not only in India but it is improving globally. Plus, recently they have some good tie-ups, some new models that they are bringing to India. So, जो demand है overall watch segment में, especially the luxury watch segment, which is having very higher margins. So that has been really good, and that is what helping ethos uh, as far as the recent momentum is concerned in the stock. बाकी आप देखिए since last many months it was moving sideways because there was no much tailwind which was visible. But now I think recently only we have seen that the demand over the last few months has been very high, and it might continue to sustain over the next few months as well. And that's the reason there has been some very good momentum in ethos. Now it has been little extended from the ideal buy zone. So ideally you need to wait for some small pullback. फिर से अगर ये ideal buy zone में 1150 के around आता है 50 60s 80s में, then the fresh position can be initiated according to O'Neill methodology. Otherwise currently it is 8% from the pivot and it's almost extended 23-25% from its 50 DMA. So थोड़ा pullback, थोड़ा consolidation, it needs to be done. So थोड़ा टाइम मिलना चाहिए इसको. बाकी overall the story is good, and the entire the setup is also really decent. So no two ways about that. Recent quarters के result भी अच्छे हैं, and I think the results are ready to improve in the next few quarters. So that's what it's getting pricing in for the stocks. There was one more query which was related to someone wants a discussion on the power and coal sector. So which are the outperformer, guys? The power and coal sector is one of the outperformers in the recent times in the Nifty or in the market. So see what happens in the power sector is now the demand is very high. अगर last 3-4 साल से आप देखिए the power demand is making a record high every year. So every few months or mostly in the summer, every summer you will see that this time the power demand was at this record high on this particular day. So this has been story for last 2-3 years, and it might continue this time also. It is expected कि ये बार भी summer अभी start हुआ है, तो it is expected that the demand will be at a new fresh high, right? And that's why even the thermal power players are gaining the momentum again. because see, our focus is, our shift is towards the renewable energy, okay? But renewable energy is not that abundance as of now in India. अभी इतना हमारा capacity नहीं है. We are gradually improving. So to fast improve the capacity to meet the power demand, you need a lot of capex, lot of growth as far as your thermal energy resources are concerned. So that's why those players are also in the momentum. Plus, abhi question mein second part tha coal. So to produce the thermal power, you will need coal, right? And not only the high demand, but the price of the per unit of electricity has also been very good in the spot market. So वो काफी increase हो रही है as far as the electricity is concerned. So they are getting good profit. Now when you come to coal, the auctions जो start हो रहे हैं, Coal India जो auctions कर रही है, ठीक है, वहाँ पे भी एक the realization has increased. So the higher the realization, higher the profit for these companies, and that's why the power and coal both the players are doing really well. Now another point which is helping these guys, right, is that firstly क्या था कि जो state के discoms होते हैं, they had a huge bills and they were not repaying the bills. But after the Ministry of Power came up with that notification of the late payment surcharge and related matters, which we generally call the electricity rules 2022. After that, even the state discoms have started to clear their dues, and the outstanding dues to the power generation companies have started to come down. And they are taking good loans from the PFC and REC. So these guys, the financing companies related to powers, are helping the discoms and they are clearing the dues of the power generation companies. So that has been a very good cycle that has started in the power sector, and hopefully it might turn out to be really well. Looking at the price that we are getting, that these players are getting for per unit of electricity, the generation that is, improving, plus the utilization, the power demand, everything is in place, and that's what the broadly the sector is in the sweet spot as of now, both power as well as the coal.
Rishit, I'll take a few queries now.
Sure.
Rail because RVNL. This stock has done pretty good. Currently, it is trading in its stage 4 double bottom base pattern, and it is just 5% to its pivot. Uh, Ratings wise, the stock is looking very strong. Can EPS of 94 indicating a strong fundamental profile. Return on equity of 19% is a strong point on the fundamental front. On the technical front, the stock has done very good. It is a very good outperformer in the current market. That is reflected in its RS rating of 93 as well. A by D rating of A plus indicates a strong accumulation happening in the stock. You can see most of the blue bars are above average, and to compare with the red bars, which are below average, that is a sign of accumulation happening in the stock. Um, Pretty much from only lens ratings wise, the stock is looking very good. From stage 3 breakout, the stock has given good return. It has advanced 80%. But the only concern is that stage 4 is considered as a late stage base according to us. And we are initiating positions from a late stage breakout. The probability of being successful are on the lower side. Uh, we have explained why the reasons for it in our learning articles. Please go through them. You'll get an idea of what I'm talking about. And if you're not aware of the stage count, also it is explained in those learning articles. But the overall point is that in any stage breakout, which is stage 3 or stage 4 or any higher breakout, is considered as a late stage, and those breakouts are most likely to fail than successful. So that is the only concern that is dragging this stock. Otherwise, it's a very good stock for addition. If you have this stock in your portfolio, I can continue to hold, and it might find resistance at its pivot of 81 rupees. Also, the 50 DMA is 14% from the current market price, so it's a slightly higher end. So you can keep 21 DMA as the stop loss, which is 10% from the current market price. Sure, Raju, will share you the link article in the chat. box. Next is Ircon and HDFC. Another stock which is related to railways construction, a major company in that sector, and it is also doing very good. Likewise with the RVNL, but the stage count is 2 here. The stock is another 6% from its pivot. So if there is any good buying happening in the next couple of sessions, there might be a breakout from the consolidation based pattern. Also, if you look at the last three sessions, very good action has happened on the price front and the volume front as well. But on the price front, the stock is not able to close in the upper half. That is the only sign of concern. And the stock is going higher. We would like the stock to close on the upper half. That indicates good amount of buying and a good demand for the stock in the market. Ratings wise, it is looking very good. EPS of 89, indicating a strong fundamental character for the company. Price strength 84, buyer demand of A, or very strong technical ratings also. So on the ratings wise, and the only price action front, it is looking very good. The base count is also just 2. So if there is any breakout happening in the next couple of sessions or in the next week, it's a very good prospect for addition. Also, the market should hold their key levels. Otherwise, if you are really adding any stocks to your portfolio, then the probability of getting returns will be minimal. Only if the Nifty holds, then only the probability of breakouts will be successful. Otherwise, most of the stocks will fail from the breakouts. Next, HDFC. The merger between HDFC and HDFC Bank is almost in the final stages. And the stock is trading in a in a tight area. You see, in the last three sessions, it has traded in a very tight area. Uh, it tried to break out on Monday, but on closing basis, it closed in the lower half and also in the negative territory, which is a negative sign. And since then, the stock is trading sideways, and the volumes have also dried up completely. Again, we should again come back to its pivot and break out on higher volume. Until then, it's better to avoid this stock. Technically, the stock has moved sideways from the last 4 to 5 months. That is the reason RS rating has also RS line has also moved sideways. It is at 73. It's a fair enough rating. It's not a big strong rating, but it's a fair enough on the technical front. EPS of 85. There is no doubt about the uh, fundamental fundamentals of the company. Even though the market cap is 5 lakh crores, still the company is about to generate double-digit growth in both its sales and EPS. So that indicates a very strong management and operational capability of the company. We all know the presence the company has across the nation. So there is no doubt about the company, but the only thing is, will the company able to generate another 20-30% in a quick succession? That is a major question we are asking here. But the price volume action tells us gives a breakout, then we can go with the price volume action. Otherwise, it's better to avoid stock at the current moment.
Thanks, Raj. Vakarya, I'll take in some queries.
Sure.
Rishit, can you give me the chart for Dinora?
Yeah, which one?
Dinora, DE space, yeah. So again, a very small market cap stock, very few fund holding. So it's better to avoid these micro cap stocks because I mean cornering in such kind of stocks can always happen, and plus it's always difficult to find disclosures on these kind of companies that are smaller in place. and plus the in-depth research that will be required for this will be very high. And so let the stock come in with some increase its market cap, the fund holding gets increased, and then later on we can look into the stock. The other we can look at is Bank of Baroda. So Bank of Baroda has been doing good. I mean, the entire banking pack, like Tushar was discussing at the start, has been doing good. Especially the last couple of quarters have been really good for the stock. The stock is forming a consolidation base, as you can see, and the stock is still 10% to the pivot. Overall, the base formation has not been that bad for the stock, and there has been a previous rally when the stock breakout from a cup with handle base went to rally up till 200, then been then declined for some time, and it's been coming back. If I talk it from the William O'Neill perspective, still some good accumulation needs to happen on the right hand side of the base. If some big blue bars come in on above average volumes, then it would be a really good sign. Overall, from the fund holding perspective, it's been one of the closest stock for the big funds at the moment. The fund holding has been increasing on a high base as well, nearly 679. Price strength has been good. Buyer demand has been good. EPS strength is fair. Needs improvement, but I mean, in, uh, the stock earnings was little cyclical initially. So maybe because of that, and with the last couple of quarters, good results coming in, plus this quarter also, if the results come in at a decent front, then you can expect the stock to be near the pivot, and that is where the ideal buy zone comes in. And if the stock breaks out on above average volume, it can be a good stock to watch out for. The other we can look at is VBL. The stock that is always there in query box and people are always excited about it. But the only thing, that's stopping us at the moment or any new entrant into this stock is the high stage count. Which was the stage count? Yeah, 4. So again, a very late stage base. And that has been the only problem for the stock, because if you look at it from stage 3 to stage 4, that was a very decent rally. And if you look at the decent rally plus in between, the stock didn't provide any base pattern to enter into, and it's a stage 4 pattern at the moment. Overall, the fundamental profile, the business profile, the stock, the company is very good. EPS strength is very good at 98. Price strength of 89 is very good. Buyer demand B plus is very good. It's just the late stage bases that are prone to failure is why we would avoid. Anyone who've been holding the stock maybe from earlier stage basis can continue to hold the stock. The stock has come down on the 21 DMA. So partial exit on the stock is possible. Full exit can be done either on the 50 if the 50 DMA gets breached on above average volume, or probably one has a deeper deeper pockets or higher risk appetite, then maybe somewhere around the 200 DMA as well. But that is not advised. 50 DMA is what as a trailing stop loss one can take it if had entered in earlier stage basis.
Thanks, Vakar. So there is a question, or you can say the comment to discuss about the diagnostic sector in India. So see, a lot of things are happening in the diagnostic sector in India. It is something like a geo movement for the sector, because in the last couple of years, the new entrants like Tata 1mg, Pharmacy, so they have slashed the price uh, 50, 60, 70% less. So if you compare it with the traditional players, like you can say Dr. Lal or the Metropolis, उनसे जो average test है, so that are down almost 50, 60, 70% than the price. So what's happening? One thing to understand, जो कि एक headwinds आप कह सकते हैं, the headwind is the margins are getting eroded for most of the players, because the new entrants and they have a standard name, like even the Reliance is entering through its subsidiary. So all the big names are trying to enter this market, and they are doing at a very low price. And one thing is the major margin of these, you can say Dr. Lal or Metropolis or the major path lab, they come from the routine test. Okay, and in the routine test, these guys are eating up the market. अभी जो मान लो कि just an example, vitamin D test, okay, which is around 15,000, sorry, 1500, 1600 in the traditional labs, Dr. Lal or Metropolis. Tata 1mg is offering at 150, 200, right? And similarly, you can say the kidney function test, which is around 1000 rupees generally, 800,000 rupees. So Tata 1mg is offering 150, 200. Pharmacy is offering at 400, 500. So these are offering at least 60, 70% discount to what these players are offering. So now they also need to either lose the market a bit, or in the second position, their EBITDA margin gets eroded, and that will happen. So it's already reflecting. अगर आप पिछले last quarter का result देखें तो आप देख सकते हैं कि margins erode होने लगे हैं इनके, and that might continue for few quarters if you look at these perspective, because these guys won't easily give up, क्योंकि ऐसा कोई rate इतना बड़ा नहीं देगा कि इनको फिर से फायदा हो जाए. But now second thing which is important is to understand is the market. So market segment कैसा है diagnostic sector का? Almost 40-45% of the tests are still done in the small standalone labs. Like if you are from tier 2 city, or even in the tier 1 cities also, you will find, especially in the tier 2 3 में ज़्यादा है small path labs. Like ठीक है, doctors are running their own path lab, having 1, 2, 3 branch, and so 40%, 45% of market are with them. Okay, which are the local players, standalone players. But what is happening that these big players, you can say the Lal Path Lab or the Metropolis or Krishna Diamond, so lot of these players are eating up this share. So before, I think ये share बहुत ज़्यादा था, almost more than 50% was having this. But the way these guys are expanding, they are expanding organically as well as inorganically. You will hear it many times that these lab has taken up, acquired this small lab और ये हो गया. वो बहुत सारा news आप देखोगे. So organic as well as inorganic expansion से, तो अभी ये लोगों की क्या हो रहा है, इतना impact क्यों नहीं हो रहा है? Because the main thing is the market share, the market is very big and they are eating up the share. So there is no problem on the revenue front. So market share revenue front वो एक tailwind हो गया इन सब companies के लिए, diagnostic listed players के लिए. On the flip side, ये जो discounts पे आ रहे हैं, the new players are entering the market, and lot of them are entering the market. ठीक है, that has been a headwind with the lower prices. So it's a thing of balancing out. एक बाजू रेवेन्यू का है, एक बाजू मार्जिन का है, बट ओवरऑल जो हाई वैल्यूएशंस मिल रहा था, हाई प्रॉफिटेबिलिटी हो रही थी ये डायग्नोस्टिक कंपनीज को, that might not be the case in the next few years or maybe the next few quarters. But yes, it will improve. It will get improved in the next few quarters on the revenue front. Let's take data patterns. So as a disclaimer, this is the part of our model portfolio stock, and the stock is already up 20% in last 8 to 10 sessions. So taking it the high price today. So we had recommended this on April 10th, right? That is Monday. We had added this stock to our portfolio as it broke out from the stage 2B cup with handle base, and we also saw that at that time our buy switch was not on, but then as and when the market gained strength, we turned on our buy switch, we started adding stocks to our portfolio, and yes, this one was looking really good, and it gave a superb return in less than 10 days. If you look at the fundamentals, they are improving. The ROE is good, it is improving. Number of fund holdings, substantial improvement, 23-24% as far as the number of fund, and almost 78% as far as the shares held by fund. So there is a very huge demand, and that is what getting reflected in the buyer demand price strength. And EPS, that's what I like the most. It's great, 99, it's highest. So, and overall, the business that they are in, it's really good. Okay, so nowadays, अपना जो defense budget, the way our defense budget is improving, so this will be very helpful for the company like Data Pattern. So on the all the front, the stock is looking really good. One thing, fresh position not suggested because the stock is already extended 20% from the pivot as of today's closing. So for fresh position, you need some pullback. Those who are already holding the stock, they can trail the stop loss because whenever the stock hits a power to pivot, that is, you can see this green flag P2P, power to pivot. It is always suggested to hold it for a bit long. But yes, you should have a stop loss or a trailing stop loss in mind. And that's how you can manage the position. But fresh entry not suggested. Those who are already holding, according to O'Neill, they can hold, but keeping a stop loss in mind and also looking at the markets. That's important. So repeated questions on Sangvi Motors. It's again a small stock. It is forming a stage 2 double bottom base. So that's what I started the discussion. I think I gave a brief idea about the overall infrastructure sector that is doing really well. There's economy we are doing really well, and in that line only. अगर आप बाकी के stocks भी देखें, you look at the action construction equipment or the related stock. So all the capital equipment goods, the infra related stocks, they are doing really well. This stock has also very good accumulation. The buyer demand is decent. The price action is good. EPS is also really nice. The market cap come here, but I think the fund holding is improving and the number of funds are decent. So this is good. I think on both the front, number of fund as well as the shares held by fund. Now, what you need to look out for in this stock on the technical front is the breakout. You need a very strong breakout on a higher volume. So 382 is the pivot level, and currently the stock is trading 2% below the pivot. What I like about this setup is like the previous rally हुई थी उसमें volume काफी high था, ठीक है? Then over here during the base formation there was a bit dry up in the volume. On the right side of the base इतना strong volume नहीं है, but there is not an issue also. It is overall it's a decent volume on the right side of the base also. But what you need to look for is the breakout. A breakout on a very high volume is what required in Sangvi movers. And if that happens, then the stock will fall in the ideal buy zone according to O'Neill methodology. ROE is little less, but I think the way it is showing improvements in the earnings, right, it might reflect in the improved ROE very soon. So yeah, overall, Sangvi Move was a good setup. And let me check the liquidity criteria. Yes, the liquidity criteria is also matching. क्योंकि वॉल्यूम जनरली बहुत लेस होता है. इवन 370 के भाव पे 32,000 shares were traded today, right? So it's a liquidity is little low, but not an issue. It is matching our criteria. Let's take Vatek. Again, a disclaimer, this stock is also the part of our portfolio and it was added on Monday. The stock has a very good fundamental profile and it is improving since the last couple of quarters, and at least the last 3 quarters have been really good. What I like is the base formation over here, especially जो left side of the base था, ठीक है? जब ये December January में base बना रहा था, the volume was very low, and when it was forming the right side of the base in March and first half of the April, you can see the buying volume was very high on the few days. So this is what I really liked about the stock. Plus, right side of the base may even a month before the breakout, its RS line was at a new high. You can see the blue dots over here. So the entire range of blue dots over here. So RS line was really good on that front. And even the business, I think the international as well as the domestic business of Vatek Wabek, both are showing a good improvement, and the profitability is also expected to improve with the growth in the revenue. So overall, it's a good setup. It's very close to its ideal buy zone. Okay, but थोड़ा higher end पे है. But yes, it is just at its buy zone. 0 to 5% is the ideal buy zone. Next, we can take some hotels. Yes, Kamath. I think most of the hotel stocks have done really well and they continue to do it. We have discussed it a couple of times, but just to give brief, the overall the average rent per room is also has been higher. The revenue growth is good. Even the profitability has improved. इनका margin growth हुआ है due to the less cost. I think after the COVID इनका जो cost cutting वाला plan था उसके बाद इनका revenue काफी margin काफी improve हो रहा है. And looking at the G20, the IPL, the World Cup, the increasing travels, अभी लोग बहुत घूम रहे हैं I think COVID के बाद, and even the business travel picking up again. So all these factors have led to a very good demand for the rooms. The tariffs have gone higher, and that's what revenue plus profitability, both the side is helpful for these hotel players as a whole. Over here, it is extended. The Kamath Hotel is extended from its base. It was a breakout from stage 5 base, not an ideal base to chase. Plus, the number of funds and market capitalization is very low for this particular stock. So it is always advisable to go with the leader of a particular group. So in the hotel sector also, you should follow the leaders. Raj, you taken? Raj Vaka, you taken questions?
Yeah, Rushit, I'll take it. Yeah. Rushit, can you give me the chart for sign?
Or you can take 2 to 3 questions and then close the session.
Okay, okay, fine, fine. Yeah, we can do that. Okay. So it's a small cap, small to medium cap ID stock, and I mean, if you look at the right hand side of the chart, the stock is doing well, and but I mean, the stock hasn't formed a base yet. I mean, if you look at this perspective, and on the fundamental perspective as well, the last three results haven't been pretty good for the company, and similarly, you can see with the results or the earnings not following in with the estimates, your fund holding for the stock has been declining. Overall, from the technical perspective, as well as the stock hasn't forming a base pattern yet, so let the base pattern for the stock come in, plus the fund holding to improve, and similarly the earnings profile for the stock to improve. At that point in time, the stock can be considered. Till then, can avoid the stock. The other is Rupa. So the stock hasn't, I mean, it's trying to form a bottom now. Plus, your fund holding is declining. The ratings have been very poor for the stock. And at William O'Neill, we always try to avoid bottom fishing into stock. As you can see, the stock is 60% off highs. The last 3 to 4 results have been is not good for the company. So, I mean, the stock needs to do some leg run up at the moment, reclaim key moving averages, deliver some good results, the RS rating, RS lines for the stock to improve. So, the only thing I can say is avoid the bottom fishing on the stocks. I mean, it will always look attractive to probably buy at low prices, but our strategy or our methodology always suggests buy high and sell higher. So it's a complete avoid on this stock. The other we can do. Rushit, you did this one Ingersoll Rand.
No.
We can take that and close it. Then. Yeah, we're already past. I mean the designated time of 5:30. So we'll take this last stock and we'll close it out. So a very good stock, as you can see, the ratings have been superb. Fund holding is increasing. Return of equity of 20% is pretty good.
your last 3 to 4 quarter results have been very good. The only thing is the stock broke out from a cup with handle base and it's not trading at the ideal buy zone at the moment. It's probably trading in the ideal profit booking zone. If someone is holding this stock, I mean, if there is a certain breach of key moving average, can look to partially book out on this stock and probably trail your stop losses at the moment. And if you bought the stock at the breakout, fresh entry into the stock is not possible. If the stock probably comes back to its key moving averages, such as probably of 50 DMA, and rest there, and then reclaims it 50 DMA, then probably as an alternate entry point can consider. So thank you guys, and we did try to take in as much queries, as much questions of yours as possible. We would have missed out on some. If uh, you guys can always mail us, and we are there available for you, and we try to answer those queries with you, and hope to connect with you next time on this platform. So thank you guys.
Yeah, thank you everyone for joining.